Hi guys, I'm Igor. A lot of my friends and family ask me about the stock market and how to invest in stock market, what to do in the stock market, how to make money on it. Okay, so because they hear a lot of buzz, only this year the stock market is up almost 30%. It's crazy. Okay, since 2009, the stock market is up like 160%. I don't remember exactly the numbers, but it's very lucrative. It seems like a very lucrative business. Okay, so I decided to create a series of videos where I can talk about the stock market. What is the stock market? How do you make money? How you open an account and things like that. And later I will create more videos on how you trade options, how you trade different option strategies, how do you sell short, and so on, so on. So let's start from the beginning. And the beginning is what is the stock? Stock is the ownership of the company. So basically, if you own 10 shares of the company and the company has 100 shares, you mathematically own 10% of the company. Okay, so that's a pretty cool concept. Why do companies issue stock? And the answer to this is I'll give you an example. So, for example, you have a crazy idea and you have a great technology and you start making moves, you create a supply chain, you start selling your stuff, it's starting to develop, and this is like a crazy thing. You have a crazy idea, crazy product, and this is coming to life. But you're very constrained because you need money. You need some kind of an investment to expand, to buy more machinery, to hire more people, to have more advertising. But you don't have the money. So what do? You go to other investors and you say, okay, listen, I have this concept, I have this product, I have this company, and it's already making money, but I need support. I need some kind of an investment so I can expand. I can buy more machinery, buy more things, hire more people, and I can develop my business. So these investors evaluate your company and they say, okay, let's consider this or that investment. But how do they evaluate your company? They have to have some kind of a measurement by which they evaluate your company. So you create shares for the company. Okay, that's the very old idea. So you issue 1,000 shares at $100 each, and you estimate your company to be worth $1 million. So you would go to investors and you say, okay guys, my company is worth $1 million because of this equipment, because of the future sales, and please buy shares of my company, and this way, if my company grows, you can sell my shares of my company higher. And on top of that, if my company makes money, I will pay you dividends on those shares for just owning those shares. Okay, that's essentially how the stock market works. The company issues shares and public investors like you and me buy those shares to help this company grow its business. And the company in return will expand their business, and the shares of the company, the price of the shares will grow, and the investors can sell it later a little bit higher with the profit. And on top of that, like I mentioned already, some companies can pay you dividend on those shares for just owning shares. So that's the basic concept behind the stock. So what is the stock market? When people talk about the stock market, they usually refer to stock exchanges, three major indexes. Stock exchanges, I'm talking about the New York Stock Exchange, Nasdaq Stock Exchange, and so on. Okay, where the actual trading is happening. Back in the days, probably you've seen the movies like Trading Places and all. People were yelling and screaming on the TV, buy this, sell this, and they would settle those prices right there, right on the floor of the stock exchange. Most of that not happening anymore. So because pretty much everything is happening electronically nowadays. But those stock exchanges still exist, and trading is still going on those stock exchanges, but a little bit differently than you used to, because a lot of electronic trading and people you would see, instead of traders, you would see a lot of tech people actually, or IT people that walk around the stock exchange floor. So when we say that market is up or down, most of all, we're talking about three major indexes. Index is the sector of the market, okay, where in that sector you have a number of stocks in that sector, and the prices are weighted prices are measured, and by that you get the average of the sector of the index. Okay, so three major indexes, that's Dow Jones Industrial Average, Nasdaq Composite, and the main pretty much index by which most of the money managers that go by is S&P 500 index. So Dow Jones Industrial Average contains 30 major stocks, stocks like Disney, stocks like Boeing, and so on and so on. Okay, so those 30 major stocks, the price averages for those stocks are calculated automatically, and that's how we end up with, like, Dow. We say Dow is up like 100 points, or Dow is down 100 points, or something like that. Okay, so 30 major stocks for Dow Jones Industrial Average. 500 stocks for S&P 500. So 500 major stocks, and their averages is calculated, and that's how S&P 500 is priced. And the last one is Nasdaq. I mean, there are other indices like Russell and other indices, but we're going to talk about those three: Dow Jones Industrial Average, S&P 500, and Nasdaq. Nasdaq contains, I think, over 3,200 stocks in itself. So right now we talked about what is the stock, what is the stock market, and the next question is, how do you make money on the stock market? Pretty much you make money on the stock market by buying lower and selling higher. I mean, this is a very simple concept, that if you have for example, a pen that costs $1 and you sell it for $2, you just made 100% on that pen. You made $1. Okay, so the same thing goes with stocks. You buy a stock for $10, you sell it for $20, you just made $10 on this stock, or you made 100% of the stock. A very simple concept. Okay, later on we'll get into things like selling short. That's just a concept of selling a stock and then buying it later, but we're not going to talk about it right now. Another way to make money on the stock market is actually getting dividends. I talked about getting dividends when I mentioned about how companies get their shares to the stock market, because they promise the investors that a couple of things: that they will develop their business, they will promote their business, and they will make more money, and their shares will go higher. Okay, so the investors can sell those shares higher. But also, a lot of times they may actually say that we will pay you dividends for just holding those shares. And not many new companies do that, but some actually do. Some profitable companies actually do. So that's basically how you make money on the stock market. There are other, like I mentioned, there are other ways to make money, not only on stocks, on the stock market, but also on options, different option strategies, on currencies, futures, and so on and so on. But like I said, we'll talk about that later. So let's say you made money on the stock market. You have to pay taxes on it. And how do you pay taxes on the stock market? Very interesting question because a lot of people don't know that if you hold stocks for more than a year and you made money on it and you uh, sell the stock that you hold for more than a year, you actually pay only 15 to 20% on capital gain on that stock. Okay, so that's very lucrative. So the government encourages you to hold stocks longer, and by cutting the tax rate to 15 to 20%. So this way, people don't have to sell stocks all the time. They can hold it as a long-term investment, and they can make this way they can pay less money and subsequently uh, put more money in their pocket. So long-term investment, more than a year, 15 to 20%. If you bought a stock and sold the stock for in the time period for in less than a year, you will pay short capital gain, which is equal to your tax bracket, basically. So if your tax bracket is 30%, you will pay 30% tax on it. If you tax bracket 35%, you will pay 35% tax on it. So there are some things to consider when you're trading short or long. So sometimes when the stock goes up a lot and you know this is going to come down, I will still consider selling it, even though I have to pay more money on it. But if you're thinking this is a long-term business, this is going to do well, and in years it will appreciate, then just leave it and let it appreciate, and you will pay actually less taxes on it. So, for example, investors like Warren Buffett, he actually have stocks that he has held for 30, 35 years and never paid a dime on taxes. Okay, so because until you sell, you don't have to pay. And at least this is true for individual investors. They're making rules right now for big hedge fund managers that they still have to pay something on unrealized gains. But for individual investors, until you sell, you don't pay taxes. The next thing I want to talk about is how you actually start on the stock market. First of all, you can open an account with a brokerage company. Most likely it's going to be an online brokerage company such as Robinhood, Ameritrade, E-Trade, Schwab, and so on and so on. There are hundreds, literally hundreds of those companies that you can open an account with. And for the beginner investor, I recommend Robinhood because you don't pay commission pretty much on anything at Robinhood. But I personally use Ameritrade because they have a better execution, and their software is a little bit better than Robinhood software. It has a lot of analysis. It has a lot of tools, and so I like Ameritrade in that sense. But for the beginner investor, I think Robinhood is perfect. So there are other brokerage companies that also you might want to consider, but I would consider for the beginner investor Robinhood to start with. Now let's go through steps opening an account. I'm going to open an account with Robinhood. Let's start. So you will go to www.robinhood.com and you will arrive at their page. Click the sign up button. Robinhood will give you free random stock for signing up with their trading platform, such as could be Apple, Tesla, whatever. I got actually GameStop, symbol GME, for $5.62. So not much, but something. Then you will enter your name, address, social security, and then verify your identity. You enter some of the fields like birthday and things like that. Then you can fund your account. They will give you a selection of banks that they work with, and you can almost immediately find your account. But if you don't see the bank among those they offer, you can actually add your bank information like routing number and account number, and what they will do pretty much like 1 day transfer of funds. So after that, your application is submitted, and your account will be ready to go, except for you need to verify your email. So they will send you email verification, and once you click on that email link they provided, your pretty much Robinhood account will be approved. In case you messed up entering your social security number or any other important information, Robinhood will send you a verification email again asking for more documentation or more proof of your identity. And after that, you're all set and good to go. Don't forget to sign up for my channel and smash the like button, and I'll see you in the next video.